0.8% in South Africa. The resource sector really dragging us down, and we had big losses coming through from the likes of BHP Billiton. That stock down 2.7%, Anglo American down 2.3%. So it was really those resource plays that dragged us lower today.
Yeah, I think the markets are a bit tentative at the moment, with economic data out yesterday, some coming out late on today, and then obviously BHP Billiton's results that were out this morning. I think the dividend played a big part in that. We saw headline earnings per share was up 90-odd%, and the dividend was up 10%. I think a lot of or expectations were that that dividend was going to be a lot higher. So BHP Billiton dragged the market down a bit, along with your Anglos and your other resource companies.
Do you think that that was a disappointing factor, and given the fact that we've got Anglo American out later on this week, and we're also expecting to hear news on the dividend front as well?
Yes, Anglos will be very interesting to see. We hold Anglos at the moment, and obviously they cut their dividend last year, reinstated it at the interims, so it's going to be interesting to see what they do at their financial year end. Yeah, but looking at Billiton, it doesn't bode well.
Well, we also chatted to Peter Major a little earlier. He was chatting about Marius Kloppers saying that demand for commodities into 2011 is going to start tapering off. Is this also a concern for the market, given the fact that one of the reasons that we have done well on the JSE All Share is because of the resource sector?
Yes, definitely. China's numbers that are out with inflation up, interest rates have been increasing or on the up, and definitely you're going to see that the demand for base metals in particular is going to decline over the future. So that's definitely going to weigh on the resource sector.
Interesting to note, when you look at the top 40 today, ArcelorMittal up 1.6%, a company that has been relatively volatile. Any specific reason that ArcelorMittal is doing well today?
I couldn't tell you offhand. We're a value manager. We don't pay too much attention to daily movements in the price. I haven't seen any news out of ArcelorMittal today. I think their results were last week. So I wouldn't like to have a guess as to why.
The banking sector on a global level doing quite well today. We had some positive numbers coming through from European banks. First Rand up 1.3% today. Old Mutual a gain of 1.2%. So quite interesting to note that the financial space pulling us higher today, or adding some support at least.
Financials are a sector that we've been overweight for, or overweight with for some time now. And the banks in particular, if you look across all the banks, ABSA, First Rand, Nedbank, Standard Bank, they're all pretty cheap. They're trading on price to books of below 1.5 when their long-term historical averages are about 2. So, you know, this is a sector that we like. We've been overweight for some time, and obviously that's good news for us.
Santam trading updates saying that headline earnings per share for the year ended 31st December will be between 40 and 55% higher than those for the prior corresponding period. Headline earnings were 906 cents previously. Looking at players such as Santam, do you have exposure to this company?
No, we don't have exposure to any of the non-life insurers at the moment. So that's obviously Glenrand, Zurich and Santam. Those trading update, or that trading update, was below our expectations, so it was a bit disappointing. But if you look at the fundamentals or the valuations of these companies, they're looking very expensive at the moment. I think Santam trades on a price to book of around 3 times. That's very expensive, and that's across all the non-life insurers. The life insurers, on the other hand, are actually looking quite attractive at the moment. We saw Liberty had a trading update out today. I see you're about to ask me. Yeah, and that was ahead of our expectations, and that's looking very, very attractive at the moment. Its price to embedded value is 0.9, so it's trading below its embedded value. It's a nice dividend payer. I think it's a dividend yield of 6%. So the life insurers, as opposed to the non-life, are looking very attractive.
It's interesting when you look at companies such as Liberty. Some investors were relatively averse to this company, especially at the beginning of last year. Do you think that sentiments have changed?
I think the sentiments are beginning to change. We have not held Liberty for some time now. We prefer Old Mutual, so we would still stay away from it, although it is looking fairly attractive at the moment. At the moment, Old Mutual and Metropolitan in that space would be our picks.
And Old Mutual gaining 1.23% today, and just below 16 Rand a share. Would you even be accumulating Old Mutual at these levels? Do you think it's too late?
No, I think it's a bit too late. Old Mutual's had a very strong run since the beginning of the year. We've had Old Mutual for quite a few years now, through its troubles, I think about 2 years ago, when it went down to 3 Rand a share, or 4 Rand a share, I think it was. So no, we're not accumulating at the moment, but we are holding on to our position.
Distell also out with results. Operating profit declined marginally by 0.1%. Net operating margin was slightly lower at 13.8%. Headline earnings rising 1.2%. It's a very niched company, but yet has exposure across the continent as well.
Yes, exactly. Those were nice results, if I can call it that. couldn't think of a better word at the moment. This is a defensive play. Obviously, alcohol, people tend to drink alcohol through good times, probably more.
Is this why you're calling it nice? Because you're a customer of Distell.
But it looks a bit expensive. This, I think the PE sits around 30 times. This is hell of expensive for value manager. But the results were good. I think headline earnings per share were up about 1%. Their spirits division, I think, took a bit of a knock. There's increased competition there. I think in the exchange rates also had a role to play in that. But yeah, it's a nice dividend payer excuse me, as well. So if you're looking for good yield, stable yield, Distell would be a company to look at.
R1.24 a share dividend declared. This stock down significantly in today's session. Do you have exposure to the stock?
We do not hold the stock directly. We do hold Cape Vin, not across all our portfolios, in a few of our high yield portfolios. So we don't have exposure across all of our portfolios, no.
Afrox also out with results today. Revenue decreased by 2% to 4.7 billion rand. Earnings before tax coming through down 24%. So a company that did experience some tough times during this period.
Yes, these results I think were very disappointing. As you said, headline earnings per share down about 25% rather. And these are off a low base, which makes it even more disappointing. Industrial gases market's very weak at the moment. There's been changes to the policy and tenders for public hospitals, so this has had an effect on them as well. So yeah, overall, off a low base, these results are very disappointing. But again, it looks hellishly expensive on a PE of around 30, price to book of about 2.5.
Andrew, looking at the overall market in South Africa, some say that we're looking slightly overbought. We're doing relatively well, but then again, we've reached below that 33,000 level. Some were hoping to see a close of that all-time high that was hit in May 2008. That said, we did see a new intraday record high earlier as well. Your sentiments regarding the market, so do you think it all hinges on what we'll see on the commodity space and the resource front?
No, I don't think so. I wouldn't say the markets are cheap at the moment, not by a long shot, but they're also not hellishly expensive. If you look back to the end of 2007, the markets were a lot more expensive than what they are today. What we use is a cyclically adjusted PE ratio, so it's a through the cycle look at the earnings. And if you look back to the end of 2007, that PE ratio was sitting very close to 30 times. Today, for the market as a whole, it sits at about 16, which is its long-term average. So I would say that markets are fairly valued at the moment. Some sectors are looking slightly more expensive than others, but there's definitely still opportunities within the market.
Let's touch on the retail space. We have Truworths down almost 2% today. Pick n Pay gaining almost 1%. Retail sales at 8.3% year on year in December. Many weren't expecting such a good number. Why do you think the retailers didn't do as well as what we would have expected with such a good number? Do you think it was just basically priced in?
I think retailers are very expensive at the moment. We saw last year they were the talk of the town. Everyone wanted ShopRite, Pick n Pay. They're moving into Africa, and they're trading on PEs of mid-20s. Walmart came in, bought Massmart for I think on a PE of about 27 times, which is very expensive. So I'm not surprised to see there wasn't as a bigger bounce as people would have expected, seeing those retail numbers coming out.